Here's an example trade showcasing a divergence and stop loss hunt strategy. In this video, I'll break down the rules to the strategy, why this trade was entered, and go over things like stop loss placement and trade management as well. So to start things out, this strategy is pretty simple when you think about just the basic components. So we have regular divergence and we have a stop loss hunt on a significant level. Okay, so this could be either long or short, and I'll show you why this one is long. It's going to be based on a multi-time frame perspective. And this strategy can utilize different indicators to find the divergence. But for this particular video, I'm going to be showcasing the market cipher B indicator. This one is quite a simple strategy and it's very effective. You can see my entry here, and this is just showcasing an example and a demo so that you guys can see the execution, and I can talk a bit about stop loss placement as well as trade management practices for this. Okay, so the actual entry, what are we looking for? Well, first thing is we want to see a significant level. Okay, we want to see price take out a significant level. So as price was coming down here, I saw it kind of gravitating towards this low right here, and this is a significant level because it wasn't touched for quite some time. We had this big move down followed by a swift move to the upside. So it's a logical level for a lot of stop losses to be resting. Okay, that's what I'm looking for. That's going to kind of classify this as a significant enough level for a stop hunt. Okay, at the same time, I need to see price come down and sweep that level with bullish divergence present on our indicator. So we have momentum indicator here, an oscillator, this blue wave, and then we have a slower oscillating. This is called the money flow wave, at least that's what the market cipher indicator calls it. And essentially what I saw was, as we came down towards this level and started sweeping it, this was a big red candle at the time. We had money flow making higher low at the time, but at the same time, price was making a lower low. At the same time, we had a higher low on our momentum, which tells us that there's a deceleration. Price is decelerating as it comes down to this low to sweep it. Okay, and I'm just going to bring this to the front. So we have that bullish regular divergence on both momentum and on the money flow wave as this swept a logical low to take out stop losses. As soon as I saw this starting to wick back up after sweeping this low, I entered the trade immediately. I was already prepared for it. I already knew where I wanted my stop loss, so all I had to do was click the button once I saw this start wicking back up. Okay, as long as we have the other criteria being met with the regular bullish divergence and the sweep on a significant level, that is criteria met. Okay, so that's the actual entry on a 15-minute time frame. Let's take a look at a different higher time frame and talk about why I would be looking for a long here and not necessarily as much a short. So if we go out to the 4-hour time frame, what we see is a range, and our momentum tells us the same thing. As you notice, momentum just going back and forth, up and down, equally on both sides. So we don't have a trend direction per se in the shorter term. So this right here is just a range, which is fine. Divergence is okay to trade in a range. It actually works better in a ranging period. So that's great. And why would I want a long over a short? Well, because we have this money flow curling to the upside. Okay, so this is curling to the upside. So that's why I'm looking for a long here on a lower time frame with regular bullish divergence. Okay, so I'm expecting that price is going to start pushing to the upside. It doesn't have to, it could continue down, but that's just the rule. Okay, this is curling up, price is ranging according to the momentum here. We don't really have a trend back and forth here, so this is fine. Can look for a long setup. Okay, back to the 15-minute. Okay, we can look at other time frames. 30-minute. This all the way into the oversold, got a green cross up in the oversold territory here, the momentum. We also actually had higher low on our money flow. So for 30-minute, you can see this is coming up. So this is a good sign. Money flow is coming up. We have momentum crossing to the upside here. So the entry had not been taken yet. It had already crossed up when the entry was taken. As you can see, it was on this candle. Then it came down for that final push down before this bounce, right? So 30-minute looked great. 15-minute looked great. And let's take a look at 5-minute. 5-minute was kind of just stagnant, just flatlining essentially with our money flow. Here was the lowest point. This was the lowest point on money flow back here. And on this push down, we had the momentum coming into the oversold. And that happened to be our last cross up here before we're getting this move. Okay. But we want to see this start curling to the upside now with this money flow on both the 5-minute and the 15-minute, which we are getting still, which is good. All right. So that's the entry criteria. That's the higher time frame, what we're looking for, why I took this trade, sweep on significant low for stop loss hunt. Now let's talk about stop loss placement and trade management. So stop loss placement, this is based for me on where's my logical target to take profit and what's the risk to reward ratio. Okay, so let's take a look. My logical target when I entered the trade, before I entered the trade, is up here. First logical high, right? And I want to have at least a 1 to 1.5 risk to reward ratio with enough wiggle room for this to kind of chop around down here a bit more. Okay, I like to use a wider stop loss and not as good of a risk to reward ratio. That's just my personal preference. I like to have a higher win rate and not make as much each trade, opposed to if you wanted to have a much tighter stop loss and a better risk to reward ratio. That's fine. I'm sure you can make that work, but you're going to have to endure a much worse win rate. So I prefer this way. Each person knows what's best for them, especially if you've been trading for quite a number of years. So with this one, another reason the stop loss is down here, and I figured that's fine. 1 to 2.58 risk to reward ratio. That's great. Meets my rule, at least 1 to 1.5. But it's also below this low over here. So another low that's pretty close back here that might be swept. And I would just want to have enough wiggle room if this were to come down and sweep that low before going in my favor. Okay, so that's what I'm thinking. That's it. That's why the stop loss is here. Both the risk to reward ratio, it meets my criteria, at least 1 to 1.5 risk to reward ratio. And also gives enough wiggle room in case we were to come down and sweep this low as well. Okay, right? So now let's talk about actual trade management. What do I want to see to get my stop loss to break even or take partial profits early potentially? Okay, so first thing, let's talk about the moving stop loss to break even. First thing, bullish structure break. So we actually already have that now. Right here is the bullish structure break. Essentially, that just means no longer making a lower high here. So lower high, lower low, breaks that lower high. So that's a break in market structure, bullishly. Now what I want to see before getting my stop loss to break even, this pull back, however it's going to do it, higher low, and then higher high, okay? So let's just assume this is the high before the pullback. It breaks that high again. That's where I go break even on my stop loss, okay? Makes sense? So just to be very clear, bullish break in structure, pull back for a higher low, then a breakout for a new higher high above that initial push up, okay? And of course, this is all opposite if you're doing a short position after a sweep on high, okay? So that is the stop loss to break even rule. And now let's talk about exiting the trade early. So let's say it hasn't reached this target. So this is my logical target that I am initially thinking about taking profit at when I enter the trade. What would cause me to exit the trade early? Well, we're looking at the 5-minute and also the 15-minute time frame for bearish divergence. Okay, if we get a bearish divergence here, 5-minute time frame on momentum, money flow, green money flow. So 5-minute comes up, green money flow and bearish divergence. on the momentum waves, I'm just going to exit the trade early and lock it in. So that's the reason. Same thing, 15-minute. If we get bearish divergence, green money flow at the same time, it's time to get out of the trade for me, okay? So that's an example trade. You know the rules for, if this is going to pull back and then break out again, stop loss to break even here on the breakout. And that's it. Very, very simple strategy, very effective strategy, looking for stop loss hunts with divergence in play at the same time with the higher time frame perspective. And we want to see on that higher time frame range or money flow / momentum curling in a certain direction. We want to be trading with that direction and looking for a sweep on a significant level. So that's it. The strategy, very simple. Here's a trade example using the divergence and stop loss hunt strategy. Here's a little trade management update. So this is what I was talking about with moving the stop loss to break even. I illustrated it earlier, and now we actually have it here. So it has materialized. Push up, pull back, push up to take out the high here. So that's going to be the time to move the stop loss to break even. The initial push up also does need to break structure bullishly. So I talked about that earlier. That's it. And now all it is either the profit target being hit, getting stopped out at break even, or remember earlier I talked about closing the trade early if we do have a bearish divergence. So I would look at 5-minute time frame, 15-minute time frame, and I'd look for this money flow wave to come green first, and then if there's a lower high here with a higher high on the price before the profit target is hit, it'd be time to close out the trade. Okay, so it doesn't really matter at this point if we get stopped out at break even or if it hits the profit target. You can't know what's going to happen in the market. You just have to take losses, take break evens, take winners as they come, and you never know which trade is going to be which. Okay, so don't think what's going to happen on any given trade. That's extremely important. Don't think you know what's going to happen. Don't think you know when it's going to be a winner, when it's going to be a loser, when it's going to be a break even, whatever. You don't know the outcome. You don't know what's going to happen. Okay, so all we can do is follow a set of rules and over a series of many trades come out on top. But you're only going to come out ahead if you do follow your system. If you just wing it and start breaking your rules, it's going to spiral you out of control. So you do need to practice on a demo, back testing, and then start with a small account. If you do ever want to do it on a real money account, you need to first do your due diligence and practice. So really just take your time. Now, that's going to be it for this video. There's not too much more to do, but wait for one of those 3 events to happen that I mentioned: profit target hit, stopped out at break even, or early exit based on a bearish divergence. So that's going to be it for the video. Make sure you check out my links down in the description. If you want to trade crypto and you don't have the ability to use exchanges outside of the US, there is BitGet exchange. So no KYC, no VPN needed for that for US customers. And then also Bybit exchange if you're allowed to use that exchange in your jurisdiction. Check out my affiliate links for those, as well as my affiliate for this indicator, the market cipher indicator. And that's it. Thank you guys for watching. Have a great day.